Hey, good afternoon, everyone, and thank you for joining us as we explore opportunities in Asia's tech sector. And as Chris has mentioned, when people think about technology, they often think about the US. The US is often the market that first comes to mind. But if you have been following the financial markets closely last year, you have realized that this strong performance is not just seen in US tech companies, but also in companies across different Asian markets, such as South Korea, Taiwan, and even China. And China is an interesting one because after many years of poor performance and investor caution, investors seem to, Chinese equities seem to be making a comeback, and there have been increasing interest in Chinese equities over the past year. So with that in mind, my first question is for 𝐢𝐬𝐿. So 𝐢𝐬𝐿, you are an analyst at iFAST who covers the Chinese markets. So are investors truly returning to China and China tech, or do you still see some skepticism lingering after the regulatory crackdowns in late 2020 and 2021?
Yeah, really thanks, Joel, for the questions. And it's my honor to be here to share with everyone about our views on China. So I think the question that Joel raises just now, whether investors are truly returning to China, I think it's a question that many of you are very concerned at this moment, because I think on one hand, I'm sure if you follow the news, then you have been known that actually from last year, China government has become a lot more supportive of private enterprises in China. If you read the news, then you will know that actually in February, the government has held a meeting with the leading tech enterprise leaders from various internet companies like Jack Ma. So they try to tell them to, I think you should boost the innovations, increase the fundings, and let the products and also the products in AIs in China and help the AI industry in China to grow. And then in May, that you see that actually China launches this new law called Private Economic Promotion Law that actually try to help these companies to grow in the years. But on the other hand, I'm sure nobody can really forget that what has happened in 2020 and 2021. And many of you probably can't forget the crackdowns on China's technology companies. Then they gradually spreading to like entertainment industries and tuitions, and many of your portfolio, if you buy into China back in 2020 and 2021, probably they only started to make profit only recently or back in late last year. So definitely the concern is for real. But I think if you look at the returns that China are making over the past 1 year, and that return is pretty tangible. So whether you have the doubts or not, China has made around, including the Hong Kong market, they have made around 30% of returns in Hong Kong dollars. And if you convert it to SGD, that was around 22%. Which is much higher than many of the markets that we like to invest, such as US. So whether you like it or don't like it, China is making a turnaround and coming back onto many of investors' radar. And I mean, now many of you are still very worried, say whether we should invest in China. But I think what the China government is trying to do is try to make the kind of like enthusiasm for China's technology not into something that's short-lived, but into something more longer-term and durable. That's why we are seeing that China has becoming, and we believe that will be in a longer time be supportive of the private sectors. Especially, as I mentioned just now, we now have the Private Economic Promotion Law. So it is a law try to help all the leading internet companies to grow, get fundings, get innovations in the years ahead. And now, the growth of these internet companies are also embedded in China's next 5 years plans. And what does that mean? Which means that at least in the medium term, like 3, 5, 7 years, we think the likelihood that China will crack down on tech sectors or similar private enterprises in China is relatively very low, because they need the tech sectors to help to boost the economy, ask them to compete with the US company in terms of technologies, so they have to support them along the way. So whether you want to ask me that really investors are returning to China or there remains skepticism, we know that the sentiment now is still pretty mixed, but we are seeing that real signals from the China government to really attracting back foreign capitals to help the China's markets, and that will gradually restore the confidence in China, and China stocks will probably go a lot better in the years ahead.
Thank you, 𝐲𝐬. So it's great to hear that the Chinese government is becoming more supportive of the private sector, and that would help to boost Chinese equities. And I'd like to stick with you, 𝐲𝐬. There's been a lot of debate about whether China is still playing catch-up with the US when it comes to tech, or whether China has already begun to lead in certain areas. So my question for you is, what's your assessment of the tech gap between the US and China?
That's a really good question. I think when you talk about China tech, I think what's come to your mind first? Probably DeepSeek, right? And that's the keywords that come to your mind because last year, January, China launched the first very big large language models, which is DeepSeek, then really sparked the fear about the US technology firms because they believe that actually the gap between China tech and US gap is much narrower, smaller than many of us thought. And over the just 1 year since the emergence of the DeepSeeks, actually we see a lot large language models emerging in China, including, for example, like Doubao from ByteDance, and also, for example, Alibaba's 𝐓𝐡𝐞 model. And also some of them are also in the global leaderboards, but maybe less well known to many of you, for example, like Moonshoot AI's 𝐓𝐶 model. So these models are actually, they are operating at a very similar, comparable intelligence scores to what the US model are operating, such as ChatGPT, Gemini, but they are at much cheaper cost. So the token prices they are using is like 1/10 of the Western models. And they are running at a relatively quick speed. So in comparison, then you can see that this model, China's are launching a much more cost efficient while giving still pretty good results. So this is how we see that actually China has been catching really, really fast in AI models. And apart from AI models, I think what matters to us most is that whether the AI models or the AI products can be applied into our everyday lives, right? So first of all, we have seen that a lot of AI has been used to improve companies' operational and revenue. So for example, like if you look at how Tencent and Alibaba, they're implementing the AI models into it, improve their revenue, help them with the precision of advertising, and help them to grow their new products, and help to reduce the cost for R&D. So these are all turning into very tangible returns for all these companies. And at consumer level, I think that's also very tangible things that China is catching really, really fast. I'm not sure how many of you have watched the product launch of 𝐓𝐡𝐞 that happened in last Thursday. So there's a product meeting update from Alibaba. And then if you look at product launch, then you all know that actually now, via its large language models, then you can just order milk tea from the large language model. So, I mean, it's comparable to what Gemini is currently doing in the West because it integrates Walmart, integrates with Google, so you can get a lot of information there. But what China is currently doing is well beyond just online shopping. So basically, you can just like order milk tea, buy from Taobao, book your tables, reservations from the models. You can pay your electricity bills. So everything you mainly can think of a daily task, you can get it through just one language models and complete it, and without navigating all different kind of like the apps that you're having in your phone. So it's so much more convenient and powerful. So this is how we see at the application side, we see China is catching really, really fast in terms of technologies and AI. But of course, if you move back to further upstreams, for example, like chip manufacturing or designs, then of course, US still leading. For example, like NVIDIA's GPU is still one of the most advanced in the world, and it is supported by manufacturing from TSMC, and they can produce very advanced nodes of chips, which China currently can't because US companies are supported by a very deep, long value chains that's supported by global suppliers, and that China can't compete with because China have to do everything by their own because they have to build their own independent supply chain within the economy. And currently, if you look at China's manufacturers such as like SMIC or even Huahong, they can even do only the mature nodes kind of chips. If you want to go for more high advanced nodes, then the production yield is much lower. And that means they have to produce at a much higher cost. And probably the product they produce are not as powerful as what we see from the Western countries. So if you look at that angle, that you can see that China's competitors are still lacking the Western peers. But if you look further up in upstream, for example, the critical materials and the rare earth, then you know that China is actually dominating in terms of what it supplies to all these equipment suppliers. Without these critical materials and rare earth, then they actually can't make more advanced equipment to support the production in the futures. So I think it's a bit simple and simplicity is just say who is better in terms of the global technologies. I mean, overall seeing that we see US still leading, but China is trying to compete in different segments. So in different part of the value chain of the technology value chain, we can see that they actually, the pace that China is catching is different, and especially in terms of application, China is catching extremely fast. But in terms of designs and manufacturing, probably there are a much longer way for China to grow in the future.
So 𝐲𝐿 has given us a very balanced analysis of a comparison between US tech and China tech. And China is clearly a major part of the Asia tech story. But I believe China is not the only market. And my next two questions are for 𝐓𝐡𝐶 and 𝐸𝐻𝐚. As we look across the rest of Asia, where are you seeing the most interesting opportunities in Asia tech?
I guess for me, it would be a market like Japan. So generally speaking, I feel that many Singaporeans, you guys like to travel to Japan for your holidays. Can you guys hear me? Okay. So for me, I think the Asian market that I want to talk about for today would be Japan. In general speaking, I feel that Singaporeans, you guys like to travel to Japan for holidays. But as an investment, as a stock market itself, I think Japan is still being overlooked by many investors, despite significant rallies in the last couple of years. So when we talk about tech, actually Japan has been a global leader in terms of robotics and automation. So in fact, I would say that today, one of Japan's key advantage when it comes to tech will be in terms of the testing equipment used by chip makers. So if you look at companies inside the Japanese market, the Nikkei 225, you would see companies like Tokyo Electron, like Advantest. These are actually your global leaders in terms of semiconductor testing. So meaning to say that if a chip giant like NVIDIA wants to make a new AI chip, they cannot bring it to the market without relying on Japanese technology to test them. So this is how important Japanese companies are inside your AI value chain. And other than that, sticking to the story of AI, actually Japan is home to a lot of those memory and storage players, which are like companies like your SanDisk or 𝐓𝐿𝐶. So 𝐓𝐿𝐶 was last time it was called Toshiba Memory. So I'm sure you guys have previously used the SD cards or the micro SD cards being produced like companies like SanDisk. But today, these kind of companies, they are not just known for their SD cards, they are known as the key prime beneficiaries of AI. Because with AI, fast and efficient storage is very important. And if you look beyond AI, there are also Japanese companies heavily involved inside the tech ecosystem. So for example, Sony, it produces your advanced camera sensors. These are used inside your products, such as your iPhone. So in general speaking, I feel that Japan is a very interesting market when it comes to tech.
What about you, 𝐸𝐻𝐚?
Right, so with both Japan and China covered already, I think the only two major markets left that I can think of are, of course, South Korea and Taiwan. And I think both these countries, both these markets, they stand out because of their tech-heavy markets. So, of course, in Taiwan, you have TSMC, which is the world's largest contract chip manufacturer. Just to let you know, if you haven't been following the news, TSMC has actually moved its 2nm chips into volume production in the fourth quarter of last year already. And if I'm not mistaken, it is the only company that is capable of creating 2nm chips at the moment. Which means if you are a fabless company, you want to make the most advanced AI chips, there's only one place you can go to, and that is TSMC. And then in South Korea, obviously, you have your twin memory giants, Samsung and SK Hynix. I think between the two, Hynix is the leader in terms of high bandwidth memory. They have around 30-40% of the market share, in addition to Samsung and Micron as their fellow competitors.
Thank you, 𝐸𝐻𝐚. So many of the investment opportunities that the three of you have highlighted, they all seem to be tied to the structural trend of AI. And so at the same time, there's been growing discussion among investors of whether there could potentially be a tech bubble, an AI bubble in certain markets, whether certain markets are overheating, because we are seeing circular deals where companies sell to other firms that they have invested in. So 𝐲𝐿 and hui-shi, I'd like to get your thoughts on this. How do you view these developments, or as investors would like to put it, are we in an AI bubble?
Hui-shi, maybe I go first. Yeah, so I think AI bubble, I think a lot of you must be very concerned about it. And can I have a show of hands, how many think there'll be AI bubbles coming this year or next year? Any of you believe it's coming? Okay, not, I see no one. So you are really confident in the tech sectors. Yeah, so that's how we feel, and we definitely get your concern where they come from, because first of all, like, there are so many companies, you see their share price soar up by like a few hundreds percentages in a few weeks or months, or sometimes even days. So that's quite alarming. And sometimes you read the news, they say why these companies then cross-invest in other companies. So they actually blur the real demand of where's the chip and also the AI power is coming from. So of course, when you read this, you'll be like, oh my God, so many people are talking about it. Is the tech shares are going to crack? And the market reaction to this news also seems like telling you that maybe it is coming. So we have to be more cautious about what's going on in the industry. But what we want to say here is today, what we see it as a whole, we don't really see a classic bubble forming up in this industry yet. So first of all, I mean, if you want to see a bubble, then it have to be speculative. But do you think that what we are using today is really speculative? Like, what am I saying just now, for example, for the China companies or the US companies, how AI can boost the business's growth, come out with the new productions, and then helping with their like growth driver, for example, like advertising, product formations, R&D. All the help is tangible, and you can see that from their financial reports every month. So first of all, AI is definitely not speculative. It's embedded in the whole business value chain now. I just want to ask you, like, how many now of you are not using AI to improve your life at this moment? Probably not a lot, right? So that's actually a testimony or like evidence that actually AI is already embedded into our life. It's not speculative, something real, and we are expected to see real returns in this industry going forward. And secondly, if you see that what kind of companies are really doing AI investment, whether it's in the US or in China, probably not just pure AI companies. Most of them come from those companies, for example, like the Magnificent Seven. And in China, you can see Alibaba, Tencent, all these leading tech companies. And their core businesses is actually not AI. They are doing others. And they have abundance of cash, and they make investments into AI because they want to use AI to grow the businesses faster and reap the growth from there. So even if they are going to see some pullbacks from the AI investments, their core businesses won't be significantly affected. And that gives us a greater confidence that even if in the futures, some of the hottest investment get pulled back and slow down a little bit, the core businesses will be strong and they have enough cash flow to withstand and continue to ride on the real investments from AI rather than the speculative and the hottest and just like hot money that flow into it. So we don't see a systematic risk in terms of for this company who are leading the AI initiatives and doing the AI investment, whether in the US or in China. And thirdly, I want to talk about actually China specific as a China analyst. So if you look at the valuation of the China company at this moment, especially the tech companies, for example, like Alibaba, Tencent, the valuation is still pretty low compared to the historical levels. And compared to many of the US companies, you can see that they are trading at a PE probably like half to their US counterparts. So that gives you a lot of buffers when you even kind of risk appears. So we can see that China's developments in AI is still pretty early in the cycle. And we see a lot of huge demands that outpace supply at this moment and soften, and these low valuations will give you even greater buffer if anything like that happens. So to me, I think the AI bubble is really not forming at this moment. So I'm not sure how the rest of you feel about it. That's my view, yeah.
Okay, for me, I will focus more on investments. So investments-wise, I feel the riskiest place to be in right now is actually in companies who are spending a lot of money into AI, but yet at the same time, they don't have a clear path of turning those hefty AI spending into actual profits. So I think the safer place to be in, relatively safer place to be in right now is in the picks and shovels of the entire AI story. I'm referring to solid leading Asian companies like TSMC, for example. They are providing the critical manufacturing that is needed to anyone who will need to be involved in AI. So whether a particular AI application fails or succeeds, it doesn't matter to TSMC, as they will also continue to earn lots of money from AI.
𝐓𝐡𝐞, can I also get your thoughts when it comes to the markets that you have mentioned, such as Taiwan and Korea? So in these markets, if there were to be a slowdown in AI investment, do you think these companies could potentially be impacted significantly?
I think the short answer is yes, because I think given how much of these chip makers' revenues are now dependent on AI deals, I think any slowdown in AI investment will inevitably have an impact on them. But I do feel that the impact is not going to be even across the market. So like what 𝐓𝐡𝐞 said about TSMC, I think TSMC is one of the best semicon companies out there. And with TSMC, I think they've also taken a very measured and cautious approach when it comes to expanding their capacity. And they prioritize long-term demand visibility and customer contracts rather than just building out just because they see more demand coming. And I think this measured approach should enable them to withstand downturns better in the event of an oversupply. But I think the same cannot be said for the Korean memory makers, Samsung and SK hynix. I think the reason is because of the inherently more cyclical nature of the memory market. So those of you who follow memory chip makers, you know that they can be one of the most volatile stocks. During down cycles, share prices can fall by 50, 60% in a matter of months. And I think that is also largely because of memory pricing, which really makes these companies a lot more volatile. So I think to sum things up, I think TSMC would probably be a bit more safe because they, like I said, they are the only ones who are able to make these advanced nodes, and they have many different lines of business. Whereas for the memory makers, because they only have one product, which is memory, I think that could be a little bit more dangerous for them.
So now I'd like to shift the discussion from investment ideas. We have talked a lot about investment ideas, but I would like to talk a bit more about portfolio construction now. So 𝐓𝐡𝐞 and 𝐓𝐡𝐶, both of you are portfolio managers. As portfolio managers, how do you think of portfolio construction when it comes to the allocation between US and Asia? You know, what percentage should investors put in Asia and to the US?
I think if your portfolio currently is very heavily focused on US tech, it does make a lot of sense to gradually add some exposure into Asia tech, for example. Because I know that most of the chip design, it mainly comes from your US, but Asia is where most of the manufacturing actually happens. So taking, for example, Taiwan, you have TSMC doing the advanced chip manufacturing. So I think in terms of markets, you can also consider not just Taiwan, but also Korea and Japan for better diversification. You can also consider stock picking. If you are someone who is not that comfortable with stock picking, there are also a number of ETFs and UTs on the iFAST platform that allows you to participate in this Asia tech story.
𝐓𝐡𝐞?
Right, so just to add on to what 𝐓𝐡𝐞 has mentioned, I think another important thing to look at is, of course, valuations. So I think at iFAST, we are all long-term fundamental investors, so we pay very close attention to valuations. So I think right now, if I'm not mistaken, I think for the US semiconductors, I think the valuations have risen a lot higher compared to their Asian counterparts. So I think that is also one of the principles that guides our investment allocation decisions. So if valuations are lower in Asia, then perhaps we could potentially allocate more towards Asia rather than US, where share prices have gone up significantly already.
Okay, so we have discussed quite a bit, but in the interest of time, to wrap up, I'd like each of you to share your top investment ideas. You know, you have mentioned so many ideas. Just want you all to share your top investment picks and the reasons why.
Maybe I'll go first. So for China, I think if you're interested in China tech, the easiest way is just investing in the 𝐲𝐶 Tech ETF. It gives us pretty broad exposures to chip makers, leading chip designers, and also those AI application companies that, for example, like Alibaba and Tencent. So if you want to get a broad-based exposure to this tech rising in China and the phenomenon and the momentum right on it, 𝐲𝐶 Tech will be one of the best solutions for you. So the code for 𝐲𝐶 Tech ETF on Hong Kong Stock Exchange is 3067. So check it out if you're interested.
For me, it will also be an ETF, but in this case, mine will be the Global X Asia Semiconductor ETF. This one is listed on Hong Kong as well. It has the ticker code 3119. So basically, this ETF allows you to take part into the most important parts of the Asia tech story. This ETF only holds 4 different Asian markets, which are Taiwan, Korea, Japan, and China. So these are all the 4 markets that we've discussed today. So this means you are getting exposure to a lot of Asian leading tech leaders, such as TSMC, such as Samsung and SK Hynix in Korea, Tokyo Electron in Japan, and also some of the major Chinese semicon companies. So in my opinion, this offers a lot of diversification.
Okay, so for myself, I'll give a slightly different answer. I know this panel is about Asian tech, but the answer that I'm going to give is a company called ASML. So this is a company that I like a lot. I know it's not an Asian company, but my thinking here is that we should mention about the picks and shovels of the AI industry, and those are your semiconductor companies. But if you think one layer deeper, who are the companies that are providing the equipment to companies like Samsung, SK, and TSMC to produce such chips? And there's only one company that can do the most advanced EUV machines, and that is ASML. So no other company comes close, not even the Japanese peers, Canon and Nikon. Chinese players, I think they are very far behind also. So yeah, my pick is ASML.
So if you are interested in any of the opportunities that they have mentioned, feel free to check out our research articles on FSMOne.com. 𝐓𝐡𝐞 has written on ASML, and we also have articles on ETFs and unit trusts as well. So with that, we've come to the end of our panel discussion for Asia Tech, and thank you all for your attention.